What does it take to become a successful investor? The question that every entry-level or even advanced investors try to grasp, but yet can't fully answer it. While trading or investing is definitely not a thing that you can learn in one day, still people believe that there is one answer to it all. Warren Buffett, the world's most famous and successful investor, collecting close to $100 billion over the years might help us to unravel the secrets of successful trading. Seeing Buffett's staggering success makes people wonder, how is it even possible to earn this much money, when most of investors and traders not only make less, but often lose their wealth over time? A lot of people suggest that in order to achieve this amount of wealth, you need to be special or know something that other investors might miss to see. But as Warren Buffett says, you don't have to be a genius. In Charlie Rose's 2022 interview with Buffett, he said this.
I'm a bright guy who's terribly interested in what he does. So I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me. And you don't need to be a genius in what I do. That's the good thing about it. If I went into physics or a whole lot of other subjects, I'd be an also-ran. But I am in a game that you probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
So you heard from the man itself. You don't need to have big brains or high IQ to become profitable in investing. But then naturally, the question remains, what do you need?
What do you need?
You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
Pardon me?
And what do you think about?
I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it, because I'll buy more.
As Buffett suggests, what you really need in investing is dedication and the right orientation. But what does that mean? Does it mean that you need to spend as much time as you can near your display, finding the right trend line, which you could anticipate to bring positive results? Not quite so. The key to profitable investing is confidence. If you understand the environment which you are in, then you can make sensible decisions. And right orientation, together with dedication, can help you become confident. Confidence in investing comes when you are properly informed about your investment instrument. You know what drives its price up, and what could plummet it to the ground. Then you will know when to buy, and when to sell it, while also losing the fear of missing out and the fear of losing everything. The biggest mistake that new investors make is investing into a stock without knowing anything about it. Just because your friend told you the stock is going to go up, it doesn't mean it will. These type of investors suddenly feel hopeless and scared when they understand that the stock is not going in the way they anticipated. If you are properly informed, however, you would know that this is not a place to be fearful and contradictory. It's the time to buy in, when the prices are low. Of course, while being confident in your decisions is necessary, you also need to understand the basic investing principles, like risk management and diversification. If you take as much time as you can, learning these skills first, then you will be able to pave your way to profitable trading, without making unorganized decisions, based out of fear or greed. Another thing Warren Buffett suggests is staying in your circle of competence. This is also one of the most important lessons investors need to understand in order to be more confident in their investments. Let's see what Buffett has to say.
Defining your circle of competence is the most important aspect of investing. It's not how important, how large your circle is. You don't have to be an expert on everything. But knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it, is all important. Tom Watson Sr., who started IBM, said in his book, he said, "I'm no genius," he said, "but I'm smart in spots, and I stay around those spots." And that is the key. So if I understand a few things, and I stick in that arena, I'll do okay. And if I don't understand something, but I get all excited about it because my neighbors are talking about it and the stocks are going up and everything, They start fooling around someplace else, eventually I'll get creamed, and I should.
As Buffett suggests, you don't have to be a master of all crafts. It's really important to understand your circle of competence and stick to it while choosing your investments. This will help you to have an edge in investing, while also minimizing the risks of uneducated decision-making. And lastly, Warren Buffett strongly advises people to invest in assets that are productive. Assets that you can grasp the value they are producing, and what kind of results can you expect from the selected instruments.
Something that you value based on its what it will produce, what it will deliver. You buy a farm because you expect a certain amount of corn or soybeans or cotton or whatever it may be to come your way every year. And you decide how much you pay based on how much you think the asset itself will deliver over time. And those are the assets that appeal to me and Charlie. Now, there's some logical follow-on to that. If you buy that farm and you really think about how many bushels of corn, how many bushels of soybeans will it produce, how much do I have to pay the tenant farmer, how much do I have to pay in taxes and so on, you can make a rational calculation, and the success of that investment will be determined in your own mind by whether it meets your expectations as to what it delivers. Logically, you should not care whether you get a quote on that farm a day later or a week later or a month later or a year later. We feel the same way about businesses. When we buy Iscar or we buy Lubrizol or whatever, we don't run around getting a quote on it every week and say, is it up or down or anything like that. We look to the business. We feel the same way about securities. When we buy a marketable security, we don't care if the stock exchange closes for a few years. So when we look at Berkshire, we are looking at what we think can be delivered from the productive assets that we own and how we can utilize that capital in acquiring more productive assets.
Looking at productive assets, you can confidently assume the instrument's value, and based on that, you can decide how much of an investment it is worth to buy in. Carefully selected productive assets will not stress you out if the stock market is down, or if the stock itself is starting to underperform, for any miscellaneous reasons. Finally, the most important thing is to start small. As for everything, you cannot jump in the area with little or no knowledge and expect huge results. Everything takes time, and investing is not an exception. Start small, know the basics, and most importantly, learn to be confident into making your own decisions. Understand what increases your instrument's value and invest in proportion of the value that it can produce. This way may not be the most pleasant one, and the fastest one to wealth, but it is certainly the most safe and right approach to profitable, and least risky investing, without blowing up your savings in a matter of weeks or even days. Thanks for watching the video. Don't forget to subscribe and like the video for more investing content, and feel free to comment down below what you think is the most necessary thing for investors to achieve success. This was Investalence, and we'll see you in another video.